Tuning in, Artful Engineer here. Going to go over in this video setups for Forex and Futures possibly this week, higher time frame looks, and dig into some lower time frames on several assets. First here we have EURUSD on the monthly time frame, and in my first video I was looking at a bearish euro, bullish dollar for at least the next month or two, possibly three. And this nice wick here on the green candle took me a bit by surprise, but I'll show you kind of why I think we're still bearish in the short term for a month or two on euro, and bullish on the dollar. At least that's my bias, at least for now, and we can reassess that as the time comes. What I'm seeing here, and I've marked, is this what I have taken from Ali Khan's teachings, that this is a type 2 dealing range. We have a nice double top that's primed and ready for this thing to pop through it sometime in the future. We've taken liquidity on the sell side, so there's really nothing here. Further down, this looks like a nice protected low. We've come off of it, consolidated right underneath the 50% dealing range, popped through it, dropped down exactly to 25 on this body. So this body, candle body here, is right on the 25% quadrant of this dealing range. And then we've shot through again with leaving a nice imbalance right above this wick at the 50% dealing range. So I do expect that this double top is vulnerable in, could be as much as like 5 to 6 months, but that's the ultimate target here. So I, in my first video, explained why I'm temporarily bullish dollar, bearish euro, and that will reverse eventually and come up here. So typically what we see in a consolidation here in a premium market above 50% of the dealing range is not necessarily a just pop straight through to take the liquidity. It's going to frustrate people for a while. This nice wick rejection and the subsequent bearish candles indicates we're still in consolidation here. What I am hoping to see, and again, this could invalidate, but what I'm hoping to see is that this month has wicked up. We might get another wick, another taller piece to the wick, but I'm expecting this to come down and sweep all these nice sell stops below here, and potentially get to tap down to the 50% range. Now that is a long way. My ultimate target on euro is 110, but I'm very much looking to get out of shorts with the stop. If we're breaching the 113, I'm going to target 112 for some partials. And if we sweep this wick and look like we're rejecting, then I'm out. This breaker here, so low, high, lower, low, close through it. This could be sensitive in the upper half here, which is nice to see that there's a 50% dealing range right at the middle of this up close before the lower low is made. So the upper portion of this really shouldn't be traded through. So if we do see a drop all the way to 50, I am for sure out, which is below 110. But I don't necessarily expect that this whole gap in here between the top of this candle and the bottom of this candle, I don't expect this gap in here to get completely filled, or if it does, it's just going to be a wick or two. Now, if we also want to drop a fib per Stoics teachings on swing breakout sequence, the 618 falls just below this 50% DRT. So if we were to see this dealing range make a break, a tap, okay, and then we're consolidating, and then we rip through that to sweep it all at a tap of the 618 for a double bottom here, and then a reach for the highs, that could be seen. And that's kind of what I'm expecting here. So we've consolidated for almost a year, and it seems ready for people to just take some shelter in the dollar, at least for a bit. And I want to see this come down and then back up. So on a monthly time frame, that's what I'm looking at here. Ultimately, once we've started to show bullishness after taking some stops, we're going for here almost unquestionably. Per a Wyckoff distribution or reaccumulation. I'm assuming this is a reaccumulation, and we have a buyer's climax, automatic rally, a show of strength in B, or show of strength in B. I don't see this as a spring just yet. We did take some sell side liquidity below the range, but it's on a bit of higher volume than I think most Wyckoff students would see to say that this is the shakeout. We did see a bullish candle with a rejection, and now we're coming hopefully back down for a spring, and then we'll see a consolidation and then a push up. So I'm hoping to see a more obvious spring with a lot more stops taken, kind of in the same vein of here. We had a nice run up. It looked like we're breaking out, sweep, knock everybody out, and then take to the highs. So if we see that again, I don't think this little wick here was it. I'm going to delete this. I don't think this little wick here was the full shakeout. I think we're going to see just like 2 or 3 nice big red candles down here and then go. So at least that's my analysis here on Euro for the monthly time frame. If we want to drop into a weekly, okay, this is where we can try to look a little bit closer. We did have a nice run of stops up here with a rejection and a break below that with a gap. So this candle looks like it wanted to fill that in with a body. We should get a down close body through it. At least that's what I'm hoping to see. And, come down this way for a bit. Why in my last video, I'm still short Euro, unfortunately, but I was trying to take a few additional positions on a Euro short as the week unfolded last week, and I got completely ripped out on this candle here on Thursday and a little bit on Friday too, right? So even though this is a daily time frame and it doesn't look that big of a move, right? If you're, say, in futures or even in a more leveraged Forex position, and you're thinking that we're just going to come up here and maybe wick, right here and then drop again, this is another, 100% move from the bottom of here all the way up here. So I got stopped out kind of repeatedly seeing things that I wanted to see on lower time frames with big rejections, but then it kept pushing. And I'll show you that on the lower time frames. But on the 4-hour time frame, what I did want to point out is this innocuous as it looks, inversion fair value gap on the 4-hour time frame, where we've created a high, a lower low, a higher high, and broken through it with a imbalance here. So bullish fair value gap and a bearish fair value gap that overlaps it. So an inversion fair value gap. If we zoom in a bit here, we can see the bodies of these candles do not close above the consequent encroachment, the midpoint of this gap. Then we've dropped down, come back, taken liquidity on the sell side, which I wanted to see the 4-hour time frame push up, knock right into this bullish candle because this is a low, high, and then a break of structure. I wanted to see this at about 5 o'clock or in the 1 to 5 London open time frame, and it happened and it rejected. So I was very much happy to see that as a short opportunity to continue lower, seeing that we hit this bullish order block. But then as it came back up, I thought, okay, maybe we're just retesting it for the next 4-hour candle and we're going to flush. Nope. And then this just plowed through me. I thought, okay, now we're up here in this inversion fair value gap, and that should hold because of the way that this wick occurred. So we were right at, it's like we wicked through it, and then we came back and closed below it, and a couple candles made it look like, yeah, that was really a possibility. And then boom, kept going through the New York session. So what ended up happening, right, we look here and the wick just touches the exact bottom of this 4-hour fair value gap exactly to the actual pip and rejects, right? And so now we've created a close at the bottom of this candle below the body. So we've gone up completely, taken all this buy side liquidity, and now are rejecting lower. So I do think that this still poses a bearish scenario for euro. The one thing that's really kicking me in the butt here, or it's just unsettling, is that there is no wick on this 4-hour candle at all. And I do realize it's part of the leg that breaks this structure, creating this breaker block. However, I still don't like that this doesn't have a wick on it. And what we call in Kit's mentorship that this is a repricing candle. So there is a possibility that that gets repriced to. Just, get a wick up there and come back down. I hopefully don't see that, because at least we shouldn't be closing above this fair value gap if we are going to continue bearish for my macro analysis for the time being. So I'm hoping that this repricing candle is just a temporary repricing candle that stays open while we continue a march downward per the monthly macro analysis, because these just look prime for the picking as well on the downside. Now, that said, just because they're equal lows in a discount doesn't mean it's going to go get attacked. By all means, we can continue to pop up here. One thing is that there really isn't a bullish imbalance in here. So all this price action was delivered with a buy side, sell side, buy side, consolidate, buy side, and now sell side. So, and we also did not close bodies above this volume imbalance on the weekly open 2 weeks ago. Or is that April 17th? And then the next week was here. Yeah, 2 weeks ago. So our bodies of these candles are closing below or not outside and above of this weekly volume imbalance. So with that, there's no bullish imbalance in here, and we're starting to possibly see the creation of a bearish imbalance on another leg down. At the end of the month, this could have just been a nice FOMC and euro rate announcement and discussion to knock out a good bit of liquidity on the buy side to then go lower. If we are to take a 4 standard deviation measurement, say from the manipulation of this leg, let me change that template to a fib with standard. Okay. Then we can see 4 standard deviations. So here's the range, or the manipulation leg. 1 standard, 2 standards, 3 standards, 4 standards. And it puts us exactly below this double bottom, right? For a nice sweep, a 4 standard deviation move to clear out these equal lows. That said, that 4 standard deviation move would complete this market maker sell model. If it were to turn into a market maker sell model, which I believe it will, then that 4 standard deviations would kind of complete that. And then we would be looking to a daily time frame or an 8-hour or 6-hour time frame to take out these relative equal lows on a continued push to the downside on the euro. So that is how I'm looking at euro here with a daily rejection, and we couldn't close above this bullish fair value gap. We were able to tap into this volume imbalance from the beginning of March. Also, this bullish inversion fair value gap is still depressing price, and we haven't seen body closes above this in a while. So that's why I have my alert here. If we're gonna cross it again, then my narrative might change to more bullish tone. But for now, I'm seeing at least to the 114.4 zone, and likely consolidation pump continue further, but that's obviously going to be several weeks or days or weeks away. But for now, I'm hoping that this beginning of the month has pushed up and back down, and we might see, nothing higher than that, really. If we wanted to reprice that candle that I talked about right in the middle of this wick, we might see that and then continued down. if we are to start closing bullish candles up here, then my narrative changes and I'm going to be staying out for a bit, because while I don't necessarily see this double top as a target to be taken out yet, if the market wants to do that, that's fine. Then I will really become bearish if we start to see some displacement to the downside. Otherwise, maybe per my last video, the dollar index could actually just instead of, and this would be the take of some buy side liquidity before a dump. I was expecting a higher push on the dollar before a dump. Again, bearish long-term dollar, but in the short term, I am a bit bullish to get above this whole range where we haven't really seen much buy side liquidity sweep in a long time, in a year here. So again, the narrative to me makes sense where we're going to take some buy side liquidity pretty aggressively before we sell off. And so that on the euro would look like a dump down into this range and then a shoot up to this double top here. On the pound, right? So the same sort of thing on the pound. I would be looking to, again, come down here, and maybe we don't make a lower low here. Maybe this was the low on the pound, and that's where we'd get a divergence where euro is going to go down and the pound will not. Or even if it does, see, the pound actually did not make a new low when this double bottom was taken. On the euro, that made a nice new low where the pound did not. Okay, so that's where a divergence means, yeah, we're pretty bullish. We're probably going to be attacking here. And the pound for now looks a bit stronger than the euro. If you go to euro GBP, kind of in a premium of this, and it looks like we could be headed down. So it makes sense that the pound is going to be a bit stronger than euro for a bit, and we could see the euro tank against the dollar a bit faster than the pound and possibly make a lower low where the pound is just going to possibly sweep down here or maybe sweep this and then head higher as well. Quick look at some other things that we saw last week. So gold on the monthly. Now we've started a new month. We did have a down close as opposed to where we were when I started the video. It was a little bit of a green candle, but this was fairly small body, obviously an internal bar. And on the monthly, we've just started. So I do expect that gold will probably make another little dip down here to complete more of a double bottom. That's a deeper run on this wick here. So a deeper run to that might create a divergence with silver, say, for example, or copper, where we have gold making a higher low and silver actually looks more bullish. So maybe silver will be the one to make a higher low and gold could be the one to, quietly take a lower low and push, or they both. Neither of them might make a lower low, but I do expect that gold and silver will still make another run down, at least to test this bottom that was created 4 weeks ago, 5 weeks ago. So right now I'm not quite bullish gold enough yet, but ultimately long term I am bullish gold once we kind of relax a bit, and I'm hoping to see a completion of a market maker sell model to create a double bottom. If we are also looking at stoics, if we have a break, a tap, and then a double bottom that liquidates the tap, then we could be seeing something at least into this area. But this range is where I would be taking it from the last real sweep of liquidity to the high, right? So we want to see at least a tap into the 618 for a continuation to the upside. And we can see that we've hit the 886 on that wick. Bodies of these candles did not close below 75. And for now, we're stuck below the 25 up here with the body close below that. So we had a nice run through the 50. So, there is a possibility that gold comes and sweeps this dealing range low all the way down here, and then hopefully see it reject and go higher. Silver, by the same token, there is a possibility that we come and sweep a bit lower, as I mentioned last week. So it's got a much bigger range here. We're still closing bodies above the 75 dealing range. And we did, this may actually, I might want to change this dealing range, but we had a nice close above the 50, and then we closed back below the 50. There's not like a noticeable gap here that I would see on a DRT, particular DRT level. This was a nice close above, say, the 50. If this was our dealing range from here up to the top, this was a nice close through the 50, a nice gap through the 25 or the 75 on this run up. But on the run back down, if we start to see a body close or a gap through this 0.75 on the way down, then we're gonna sweep 45.6 before any other bullish activity takes place, in my opinion. If we do start to see wicks but no bodies closing below the 75, the bottom quadrant here, then we're in for another bullish run. So the silver bulls, I'd be just watching for that, right? If we are continuing to close higher, great. If we are going to sweep down, watch for some daily and or weekly closures where we get a wick and a close. We're already back to below the 618 level. So that's where, if we're not able to close above the 50 of this range, then we could very possibly be headed south for a bit to the low 50s, high 40s range, mid 40s, before another run up. If we were to take a smaller dealing range like this, where this low to this high, these levels to me don't look appropriate from an analysis point of view. There's not really a gap or an order block that I can see that aligns with these particular levels, which, as Ali indicates, is typically then you've got the wrong dealing range. So when you can kind of clearly align where bodies and wicks happen and how the gaps and support and resistance that you do see, there's a lot more confluence with the dealing range taking this low up to this high, right, where we have this gap, the weekly gap up, and then the bearish imbalance down through it. At the 50%, we have a bullish imbalance through it, and for a while we were struggling to close above it. We ran through it and back, and now we're consolidating below it. So this leads me to believe that this is a more appropriate dealing range, and that we're seeing some support at the 75% DRT. Again, there's no real gap here or an order block that pushed down for liquidity's sake here. So, there's something to be said for possibly taking a different range that might look something like this, where you have a 50. There was a gap here at the 25. There wasn't really a gap coming down. We could drop to a lower time frame and see if anything there makes a bit more sense. But again, there doesn't look to be an order block or anything off the 25 or a gap that aligns there. The only thing here might be that the 50%, we're seeing a rejection and body closures kind of right at it, and rejection. So silver right now just looks to be in a consolidation phase. We did take some buy side sweep this past week on the rate announcement, and I'm seeing lower prices, at least to kind of take out this double bottom here. That's why my alert here, silver crossing 65.9. I do think we come down and take those doubles, if not this low, for the short term. And then once dollar starts weakening again, I don't see a correlation much between silver, gold, and the dollar, but certainly if the dollar is increasing, then there's less likely for money and demand in the metals just at the same time. But doesn't mean there's a strict correlation to it. However, that said, if we do see dollar strengthen and silver and gold weaken, I'd be looking for turnarounds in this area and possibly see where dollar, euro, silver, and gold head after that. Non sequitur to soybean oil. So this one, as I pointed out last week, I was still kind of bullish, but I wasn't going to touch it. We did plow through it, and I do believe we're just headed for highs on soybean oil and soybeans themselves. So we had a nice bullish close up here, and we have just this very suspect top in here with an imbalance, and quite a long way that we came down. We can make at least a trip back up into the premium of this big range here. So I do see soybeans and soybean oil still making runs up. Not maybe hopefully not too much higher. Otherwise, our grocery bills are going to be through the roofs, but they already kind of are. Oil, I did expect a bit of a move to the upside, and I don't see any indication that tensions are going to be easing in the Middle East. So again, this double top back here and this double top just seem primed for an explosion in oil to at least clear that out at 130. You've seen some other channels and other people calling for 200 or so. That might be possible. Just to take a 4 standard deviation measurement off of, say, this manipulation, we're looking at 170 almost. So it's certainly not out of the question that this double top and this double top just could get completely cleaned out. A 3 standard deviation move would be to 146, and a 4 standard deviation move up to 169. Again, rough cut, but those are sizable moves in the oil market. Bonds, not much to say since last week. I do expect them to rise a bit with the dollar, but ultimately to kind of form a top somewhere where it's taken some buy-side liquidity probably into this imbalance that occurred on a monthly basis and then dump again. That's the outlook on bonds, at least for the short term. So in my analysis, it should follow the dollar a bit for a while before doing much else to the downside, right? So we've this week with the rate announcement come down, cleared out all these sell stops here, and it looks like we're starting to invert this gap imbalance to the downside, and we're ready to head up ultimately to come back for this double bottom, but not until a push up and then back down. I could be wrong. It could just come sweep these, but that seems, because of this big push up and a double test with a quick sweep of this, I don't see it wanting to come take that right now. I do see it testing it here, closing in this imbalance right here, the bodies. Let's mark this out. Got an imbalance here. And the bodies of that, oh wait, did I get that right? I did. But yeah, the bodies of that barely hanging on there. It's possible that we're looking at this volume imbalance, in which case we're definitely just closing that in, coupled with this imbalance. I see this as the start of a type 2 dealing range where this was potentially the market maker sell model on an accumulation to continue higher as war rages on. And people are kind of forced back into dollars for the short term. What else? Indices. Okay. On the monthly time frame, again, as mentioned last time, I do see this as a push up to be a false bullish narrative. I do think we're going to wick here, maybe up to the 29,000 mark, and then be headed down. Obviously, could be wrong, but I'm trying not to do too much on a long time frame with the indices. The Dow is what's still giving me a bearish indication. We haven't yet cleared this wick that we had before, and if we are starting to see Dow come and close below here, that's going to give me an extra bearish tone on the stock indices. Most bearish would probably be the Dow then, because it's showing less of a willingness to head up. But I do see this as just a last liquidity grab on ES and the NQ before something a bit more severe. Again, time will tell, and I'll keep tabs on this, certainly. But yeah, this nice little gentle rundown on decent volume was very obviously a target for a quick run, and we'll see what happens here in May now that May has started. But for now, I'm looking for signs of topping out in this 28 to 29,000 range. What else? Bitcoin. Lastly, but not leastly, Bitcoin. So I do have my alert here at 80,000. What I have marked out on my other charts is this stealing range, I think. Is it this stealing range? Yes. So 50% of this stealing range. So I ultimately want to see a rejection down to, say, 49 or below on Bitcoin. Where are we also in this stealing range? So from here to here, 59,930. What are you doing? Okay, so right now, we're basically right at the 50% of this, and I'd like to see, so for this was the break, a tap, and I'd like to see a double top somewhere in the 83 to 88 range on Bitcoin, which would align with the 50% of the overarching, what I see as a type 2 dealing range. So we have nice equal lows here and imbalance below it. And if we're pushing up here and we're coming back down, we close with an order block or breaker at the 25 going up and breaking through it. Consolidate at the 50, another break through the 50. So it would be good to see a tap of that. In the more extreme case, we may run up and take this high and kind of test something a bit higher up on the 1/3 to 1/4 range here. That would, if we're doing that and giving this gap a complete fill-in on the bullish side, then yeah, my bearish thesis is completely off. And this was a double bottom that might have been a break tap double bottom. But ultimately, I don't see this market maker sell model as complete yet until we're down in this area. So we did consolidate, sweep up, and dump. So I think consolidate again. Here we're doing the sweep up, and then we'll have a quick second stage distribution to the downside. Again, I could be wrong. If we start closing in and inverting these with gaps to the upside on this side, then we're definitely going for this, and there's not much of an imbalance to resist price on the downside here. There is this inversion where we have a bullish fair value gap here and inverted on the way down, right? And this is in a premium, so it's possible that we come up tap that again, and then come down. But for now, I'm slightly bullish Bitcoin. I was bullish down here, but I didn't take any trades in it. I would have said, look, this looks like we're going to head down, but because we're still in a discount here of the parent dealing range, we're in a discount here, it's likely that we're going to take some more liquidity, tap an imbalance before we run down. So a quick run, a few weeks of bullish Bitcoin. Still, we're going to consolidate probably here at the 50% of this range, and then with another wick up or two, and then drop. So that's my prediction on Bitcoin. I wouldn't take too much of a position on Bitcoin yet. I do think we'll just chop around here for a week or two with some heavy wicks up and down as things kind of settle out, and then I'll be looking for a manipulation higher and a drop. So when we drop down to a lower time frame, if I start to see that happen, I do want to see it pop through here, and then we're consolidate around here at the 50%, and then potentially pop up to somewhere in the 83 to 88 range, and hopefully reject from around the 75 DRT of the stealing range from 97.9 to, I have to redraw that more accurately, basically 60,000. So I'm looking for that. I'm looking for consolidation, a run up, and a rejection. And I think that's going to do it for this week on the assets that I'm looking at currently. So again, looking for euro short, pound potentially short, dollar long, Bitcoin chop, indices probably some chop with some potential big spikes to the up and downside to kind of shake people around. Soybean oil and soybeans to the upside. Oil generally to the upside. Silver and gold more down than up. And actually the Japanese yen, I've been waiting to buy it. It didn't reach my alert. So it's possible that this is the inducement. There's rumor that the Japanese government, or some people say they've confirmed it, the Japanese government has intervened in the Forex market to prop up the yen. May or may not be true, but either way, the chart will tell us we have a big imbalance here that could actually, I'm hoping, flush to turn into a breaker pattern where the yen actually will appreciate as we take out this low, and appreciate on the yen. There is just the possibility, though, that the yen continues to weaken against every other currency, and so I might be looking for longs around here. And if that just gets invalidated, then I won't be touching the yen for quite some time. Even if, some other people might see this as a bullish liquidity grab, and then it's just going to keep tanking on the yen. That's completely a possibility. I've been kind of looking to long it for a while, and if this is going to give me an opportunity to do that cheaply, I'm going to see if we can come and just sweep these lows, and then we'll head to the upside, possibly take this double top as a target. And I'll do a bit more analysis on that maybe next week or so, look at UJ a bit more. But so that's where we're at this week. Thanks for tuning in. And as always, you can leave comments, questions, and I'll do my best to answer them. Thanks.